What's up, traders? Welcome to 7minutestocks.com, strong believers in technical analysis. Today is May 2nd, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Alright, let's get started. We have a lot to cover. The first thing I want to look at is the S&P 500. I'm pretty much standing by what I was saying earlier. I mean, right now, what I'm seeing is an up move, and then we have consolidation here. So there's nothing telling me that we cannot move higher. However, we are in this rising wedge, which also tells me, and we haven't broken down from this rising wedge just yet. As you can see from here, we actually stayed within this triangle here. We came down, but we broke down through the triangle, but we are still sitting nice and fine right there. In fact, to be honest, I could actually technically, on a technical level, move this down a little bit, and then we still have this triangular formation. So we can still come up to test the highs here, okay? So the analysis is still pretty much the same. Nothing has changed very much. We have the dollar. The one thing about that I noticed about the dollar is that when we broke down, we retested this neckline here, and then we came down again, and now what we're doing is retesting again. Now here's the caveat. We do have two moving averages kissing each other right now, which will give a lot of pressure on the dollar. And if the dollar does come down, then we obviously know that the markets will go up. However, because this is a double test of the neckline, that makes this neckline or this head and shoulders pattern a lot weaker than originally thought. So the more we bang on this neckline, the more of a possibility that this pattern may fail. Okay, one thing I wanted to cover is my mathematical calculations. I'll be doing them a little differently from now on. Now I'm going to try and make these things called max moves, okay? So originally, this is the AXP trade that I took on the short side on this day here. As stated in the previous videos, I'm going to load the original lines here. As you can see, and like I said in the previous video, there's nothing stopping it from tagging these two lines here, and the mathematical calculations just held up just perfectly. Instead, what I'm going to do is a max move calculation, which is this line here, and I'm now expecting AXP to actually pull back from this level. What we did was we broke up. This was 1 cent higher than here, which would technically be a close above. However, because it's only 1 cent, I'm looking at this as a close above, and then the next day a close above here would be a confirmation that this is going to probably continue higher, and therefore I will stop out. Okay. One stock that I found that I actually really liked, however, I'm probably not going to take the trade, is Ford. If you look at Ford, and I'm going to load the drawings for Ford, this line here, this is this white line. I don't know if you can see it. That's actually a calculated line. That's actually from the mathematical calculation for max move down. Okay, not only that, we're at this purple line, which is the 618 of the Fibonacci retracement, 618 being the most popular retracement line, as well as we have this pivot point here and a gap window here. So there's a lot of support on this stock right now for the upside. However, if you look at the ATR, it's 28 cents an average per day. Now if I pick up 100 shares, which will cost me about $1,100, my gains will just be about 40 cents. So what is that going to give me? Like 40 bucks. My stop out would, however, be all the way down here. If it did come all the way down here and confirm below this pivot here, then I would stop myself out. But as you can see, the risk reward just isn't there. So I'm going to stay out of this trade. However, what I would like to do is monitor this trade and make like as if I did take the trade to the long side, okay, and see how it plays out from tomorrow. Okay, so that's Ford for you. Last but not least, we do have ABX. ABX is a stock that I wanted to just do a quick analysis on for a friend of mine. And what I'm looking at here is a falling wedge, if you will. And what I have here, this dotted line here, these dashed lines, is actually a mathematical calculation for max move. Just so happens that is supported by this gap window here. I don't know if you can see it. All the way over here, there is a gap window. See here, actually it would be considered a gap fill, so that gives it a little bit more, puts odds more in your favor. So it may not even get there. Again, this is just max move, but you're gonna have some resistance here, which is a double bottom. It's gonna be minor resistance. I still think that we might actually, for ABX, tag this line, but once it tags this line, because it's a mathematical calculated max move, I expect at this point for this falling wedge to actually have a breakout. Now if this falling wedge does break out, my calculated level for price prediction, or I should say target, and it's only a target, it doesn't mean anything else but a target, and wherever it breaks out, say it breaks out down here, that'll be the target price, which would be $40 around there. Okay. One thing to keep in mind for ABX is that it's currently in a downtrend. So if I were to go long on this level here, I would be doing what you would call a counter trend trade. Now there is a possibility that the trend changes from down to up, but as any trader, as you can see, the moving averages are, all three of them are pointing down, and we have, you know, large spaces here and here. I mean, this stock is in is kind of sick, I guess you could call it that. Right below here we have a Fibonacci retracement, a 50% Fibonacci retracement, and included with the Fibonacci retracement, we have that green line, which is a pivot point here. So we are going to get some support there. If so happen it does break down through my calculated the mathematical formula there. I mean, these mathematical formulas, they're not perfect, not even close, but they have been working recently. I mean, if you look at the SPY, we have this calculated line at 141.84, and the SPY came right into it. I mean, if you look at things like Apple, for example, we had a calculated line for Apple, and let me load that up, and we have this line here. I think I drew another one for max move, and it came right into that line, and then just, you know, just pulled back from there. I mean, we also have MasterCard. MasterCard was a recent mathematical calculation that I made. It went into these two lines and then pulled back. Okay, and this was just a few days ago. And we also have things like IBM. We also have things like IBM here. IBM made this 211.14 level all the way up here. It came really close to tagging that and then just pulled back. So these mathematical formulas, they work. I mean, they do fail from time to time. What I like to see is, you know, supporting indicators like a doji with higher volume and such before I actually take the trade. I would never take a trade just based on the mathematical formula, but it does help. You know, it does give a indication of when a stock may or may not turn. And from now on, you're not going to see all these lines anymore because it's very confusing, and I'm just going to do a max move type mathematical calculation. All right, that is your 7-minute stock update. Until the next video, have a nice day.